Maybe there is no audio. Hey, look, audio. Thanks, Michael. Ooh, black and white when muted. I actually agree with that. I don't know if that's a thing, but yeah, sorry, I was recording a video yesterday and Atlassian looks like it's trying to get towards yesterday's highs. It closed almost right at the high. Almost right at the high. Roku um, also starting out the day higher today after just a blockbuster day yesterday. Market, pretty good rebound yesterday on very good volume. It was still a red day. Let me go back to IBD. I'm not quite sure. Yesterday probably would have been another distribution day. But what you have to wonder about is what the market is wondering about. It appears that they're worried about China. Uptrend under pressure. 5 distribution days on the Nasdaq and the S&P. Leader up in volume was Atlassian. Oddly enough, they didn't put Roku. I guess Roku's not a leader. Now that should change. So I mentioned earlier when you could not hear me because I didn't know my thing was muted. I pulled up I pulled up Donald Trump's Twitter, which I never do. It's the first time I've ever done that. Because why? Why would you subject yourself to that? And all he's tweeting about this morning is tariffs, 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 tariffs. So, situation where if the market doesn't like tariffs and he's talking about tariffs, that's probably not necessarily a good thing for our stocks. So I really haven't bought back in, even with yesterday's nice rally in the afternoon. I really haven't bought back into any of this because if tariffs are going to be the major impetus, um, then the stock market will probably be under some great pressure. Feels like we are green after bad news, much puzzled. Yeah, this is one of those uncertain times. So let's start with the good news. The market's still above the 50-day moving average. At least the Nasdaq's still above the 50-day moving average. We had Roku with just a tremendous day yesterday, a bellwether day yesterday. It looks like decent follow through today. That's good. We had another leader work, Atlassian, which is today going over yesterday's high day. Also looking very good. I'm sure there's a few others that are looking okay, but those two really doing great. Yeah, IBD. Yeah, I can't listen to that stuff. So they rose and they fell. I don't really like IBD's some of their articles anymore. William O'Neill, the founder of IBD, you know how wealth goes after 3 generations, it's gone. Um, Investors Business Daily has been handed over to the second generation. So if you pick out the good parts, I don't like. They used to not do this. They used to not. Of course, they also didn't really have the app, and they didn't have. They weren't trying to get. They weren't acting like a traditional news company does today. Today, news companies act differently. They try to shove news in front of your face, write whether it's newsworthy or not. IBD used to write news articles. They used to put the paper out daily. I get why they don't. That's fine. But they shouldn't shove news articles in front of your face if they could potentially be false. And I don't like the overnight stuff with them. Unless it's a legitimately rise or fall. And they do that every day. They say every day the futures rose, the futures fell, the futures are flat. It's like no one cares. So I don't think they should put those articles out whatsoever. They should stick to their bread and butter research and analysis, stuff like that. AMRN looks like getting with it this morning. at least on the 5-minute chart, up 2.4%. But waiting for this thing to do something for quite a while. Looks like we bottomed all the way down here to this and bounce. So that could be a good sign. Volume here is, let's see, a couple more days. It's like a little, slightly elevated. Not tremendous elevated, but definitely a little bit elevated.
Hey, TechLead here, and welcome to another episode. Today we're going to be talking about how I lost $350,000.
That's funny. Second comment is, why are you sitting in a wooden shed now? Yeah, I'll ask that question too. Anyway, AMRN looks like it's having a pretty good day. We'll see if this will lead to more. It's definitely taken out a little bit of this trend here. So that could lead to a nice little mini rally. Oh, there you go. AMRN looking like it wants to get frisky. NASDAQ down about 0.25%, which is basically flat. But definitely finding a low here. Well, I won't say definitely finding a low, but there's a good case for AMRN finding a low. Double bottom right there, and we're not too far off of it. We just have another nice extension candle here. This is much better volume. You can see how big that volume is. That's pretty good, man. I like that. That stock's moving. Very wide option spread on this one. Oh, 5% already. Pretty good. Roku 3%, Twilio 2%. Okay. I've been liking Twilio to get going. I believe Twilio has a flat base. 1, 2, 3, 4, 5. And a potential for 163, I think it is. MDB, this is one that I saw yesterday. I think we've had this around. I do like this declining trend line in MDB. It looks like it's too deep for a flat base, but it could be building a cup base. And potentially trying to get back above this trend line here. But even this one getting back up didn't work out, for me at least. Yeah. So pretty nice tight action, respecting the lows there. I'm not mad at this whatsoever. This one's pretty interesting. Can't say we had a pocket pivot day yesterday. Looks like it's not a pocket pivot day yesterday. Volume's been decreasing, which is pretty good on MDB. If I would draw this trend line better, I could probably actually know what's going on. So basically getting right up to that trend line so early today. We're sideways there. Let me look up MDB. Oh, it's Mongo. It's MongoDB. Okay, so everyone's all excited about Mongo. That's good. 86 composite rating. 68% EPS change last quarter. Pretty good on the earnings front. Although EPS rating they have is a 44, which is very strange because they don't have last 3 quarters average EPS growth. That's why. 3 quarters of EPS acceleration, 44 EPS estimated change for the current quarter, 55% last quarter percent earnings surprise. 3-year EPS growth rate doesn't exist. 2 years of annual EPS growth, which is good. Sales margin and ROE, 71% for sales percent change last quarter. 3-year sales growth rates, 59%. Negative 25% pre-tax margin? What? I don't understand companies today. Seriously, like fucking Uber. Uber's IPOing today, right? Is that a real thing? Uber, they said, has never turned a profit. I'm like, seriously? They've raised like $50 billion. What the fuck are you doing with $50 billion where you're not going to make a dime? And how are you instantly going to go from that to making money? Like, Amazon's been profitable its entire history from frickin' day one, basically. I don't know every quarter verbatim, but like, how do you give so much money to something that just doesn't make any money? It makes no damn sense. Now, I know the Tesla bears could come back on and argue about Tesla, but I would argue that's a little bit of a different business model than Uber. If Uber isn't making money with their first X amount of taxi cabs, then it's not going to work with a billion taxi cabs. Tesla is actually building infrastructure, ramping stuff up. Yeah, but that makes no sense. Look, I get it. For, like I said, Tesla, capital expenditures, blah, blah, blah. But for Uber to not be profitable, they're just a damn software company. That's all they are. All they are is a software company. They should have margin built into their business model from day one. Are they really selling people on self-driving cars? Is that really what they're doing? That's the only thing that makes sense here, is that they're... But if you're going to do self-driving cars, just fucking do self-driving cars and forget about taxi cabs. Who cares? Anyway, it just drives me nuts. That just proves it's better at raising money than having an idea. All right, back to MongoDB. 3-year sales growth 59%, pre-tax margin negative 25%, which is crazy. Debt to equity ratio 82%. $7.4 billion market cap. C minus accumulation distribution, which seems a little odd. 1.4 up down volume, 6% change in funds owning stock. Yeah, pigs flying, I guess. Anyway, AMRN may not be a pig. We shall see. Let's look up AMRN again. See if this thing makes any money. AMRN, Irish developer of novel drugs for the treatment of cardiovascular disease within the field of lipid science. Composite ranking of 70, 29% EPS change last quarter, 54.5% last quarter earnings surprise, 30% EPS estimated change for the current quarter. So not too bad there. Pre-tax margin negative 42%, but it is a drug company. So 3-year sales growth rate 37%, sales percent change last quarter 67%. 13% change in funds owning stock, 3/4 of increasing fund ownership. Not too bad. AMRN, not too bad. And pretty good volume this morning. I'm not even super mad at that candle. That's pretty good. VFF up 13% now out of the lows. So we had it in kind of a weird symmetrical triangle. Looks like that has kind of shifted into maybe a declining wedge, which should be bullish for VFF. Is VFF your BFF? Talk amongst yourselves. Nice expansion, fantastic volume coming into VFF here. And the ability for it to have that kind of volume is pretty good, I would say. And there's quite a bit of buying right there. So bouncing off the 10-day. Okay, they did have earnings. Let's see what IBD has to say about VFF. 46% composite rating. Canadian company that produces and distributes greenhouse-grown tomatoes, bell peppers, and cucumbers. Actually, we found out this one does grow marijuana. We actually looked into this company, if you guys remember. They grow MJ. 600% EPS change last quarter. I'm assuming that's off of this earnings report. Oh, really? Yandex, huh? Yes, Nick, I have. Yeah, I actually closed out some of my TQQQ position. Probably a stupid move, but I can always re-enter. I'm not a big fan of this whole tariff situation. The market seems very shaky by China. And I was up 60%. I went down to up 40%, so I was locking in some profits. I don't want that to overnight evaporate to, only up 20%. That would really piss me off. So I locked in some profits, actually towards the lows of yesterday, unfortunately. And we'll see how it goes. I'm not too mad if it reverses on me. I'm in it for the longer trend. So, yeah, I thought about buying SQQQ to hedge. I thought about it. Yeah, it's kind of the same thing if you think about it. It's kind of the same thing. Whether you sell TQQ or buy SQQ. I know I'm missing a Q on those, but I think it's a little counterproductive holding both. You probably, I don't know, it seems weird to me. Anyway, VFF, let's take a look here. Okay, 16 versus negative 3 cents in the same quarter last year. Sales were 37 over 29. So sales were up by about 20-something% year over year. Yeah, about 22% year over year. Said the guy trading options. Well, my TQQQ position is not options. That's triple the Nasdaq. I'm basically playing two strategies in my account: options and that TQQQ strategy. E-Trade layers stuff over your patterns over your charts, apparently. I never knew that. How do they do that? Oh, looks like they've got a little chrome app thing. I'll have to play with this. Whoa. It's a little freaky. Strategy Lab options chart. Display studies. I've never actually looked at the charts in this before. Well, the whole yeah, maybe Eli. I don't know. I just it doesn't. See, the whole thing with options and hedging is you can buy and you can sell the option, right? You can sell the option. That's the important part about options, is that number one, you can reduce your cost of your actual position if you want to, or you can hedge. You know, I just didn't think like anyway, I just didn't think it was for me. That's all. That's okay. Nasdaq going a little bit lower here, 0.62%. I said a little bit ago regarding Donald Trump and his tweets and kind of how the markets man, his Twitter is crazy. I'm actually not looking at his tweets, but the likes and the retweets. They're just constant. It's crazy. Going a little bit lower here now. Yeah, see here, I think what I think is happening is the market really doesn't like the tariffs. I don't give a shit what Donald Trump says. He doesn't know what the F he's talking about on a lot of things, to be honest with you. And he's wrong about tariffs. I'm looking at a tweet right now. Here, I'll pull it up. I'll pull it up for you. I mean, he's just going on and on about tariffs that he's not going to back out. Tariffs will make our country much stronger, not weaker. Sit back and watch. Tariffs will bring in far more wealth to our country than even a phenomenal deal of the traditional kind. Unfortunately, Trump doesn't do words very well, so you can't even really know what this means. Like, does this mean he's just going to tariff China and not do a deal? No, he's still doing a deal. This is all posturing for Donald Trump. But the fact is, the market tanked on his tweet about tariffs. So the market's concerned about tariffs. That situation hasn't changed. So while yesterday things looked great for Roku and look okay right now, and I kind of am still pissed that I missed buying Roku, or I didn't buy Roku, and I didn't buy Atlassian yesterday, which I was looking to buy Atlassian the day before. There it is. I was looking to buy Atlassian the day before because it was getting right into this trend line. It did break above it. I mean, I should have bought it. I should have just freaking bought it, but I didn't. Anyway, I mean, I left money on the table. That's okay. If the market tanks, I'm not going to care about that. So, what I want him to say about a trade war that should have been started decades ago? Well, I don't. That's a much larger argument, Ted. Free trade is, you can have a lot of economic discussions about that. That's fine. I'm viewing it in context to this stock market right now. I'm not trying to get political about it. I did a little bit. I said, he doesn't know what he's talking about, blah, blah, blah. And he doesn't. Especially, I mean, the guy is not a historical tariff economic. Donald Trump is not an economist. He does not know about economics. Economics is different from running a business. It's different from running a business. Now, we should have stood up to China in regards to intellectual property. I absolutely agree with that. If he can get something IP out of this deal and then everything else stays the same, I think it's okay. America touts free market. Well, what about worldwide free market? See, here's the difference. But that's free market, Ted. See, I know you're not in the conversation with 50 and me. I'm not trying to throw you under the bus. I apologize if I sound like I am. But if America believes in free markets, if we actually truly believe in free markets, And I'm not arguing for or against this, okay? This is the thing, is everyone takes, depending on what, you know, this is broader. This has nothing to do with you, Ted. This is broader discussion because I talk with 50 about this crap all the time. So I always talk in generalities. Well, he doesn't listen to his team, Ted. That's the problem. He doesn't listen to a majority of his team. But that's another issue. So, look, if you believe in free markets, I think that the market has spoken. They want to produce stuff overseas. America wants to buy stuff produced from overseas because it's like half the cost. So it's hard to argue that. Now I know things that affect us personally and directly. Obviously, we're going to have a little bit stronger feeling about that. Well, anyway, I don't want to get too deep into that discussion. We can talk about that in Love and Politics all day long, Ted. Love and Politics all day long, because there's always explanations and nuances to conversations that need to be had. If you look at Love and Politics, 50 writes, and sometimes I even write page-long synopses about what we actually think. Really good stuff. I really have a lot of fun in there. Anyway, what I'm thinking about right now is that we looked the other day at an IBD article saying that tariffs are bad for stocks. That's been historical. That's pretty much in the charts. Tariffs are bad for stocks. It slows economic growth, and Trump saying it does the opposite, does not make it fact. If you look at the GDP numbers back in the 30s when it happened, and even before that, we looked at it. I think it was yesterday. We looked at it. He wants to go where the gold is. China trade policies are relying on weak China, which changed through time. It's no more beneficial for them more than us. There is a timeline to be accountable for. Yeah, if you want to go in that direction. So, yeah, China has cheap labor relative to the U.S., which is essential, and also basically like no EPA, which makes things cheaper to do over there. That's the free market, right? So we send stuff over there, they send stuff back over here. It apparently works. We've been doing it now for 10, 15 years. That's how China, pretty much became huge. As their economy matures and they grow a middle class, it will become less advantageous for us to do business in China. We're seeing a little bit of this the past 5 years or so, 3 to 5 years. A lot of people are looking at building stuff more in Mexico because it's closer. Because the lead time in China sucks. Like, you really have to have a deep knowledge of your business cycle and your consumer in order to actually. It takes like 20 days for shit to get here. Anyway, the whole point of me was saying is that if the market doesn't like tariffs, and Donald Trump says tariffs are great, and he sticks with tariffs and does tariffs, the market's going to tank. That's why I sold my TQQQ position. One of the reasons. I wanted to protect my profits I had, and until this gets resolved, the market could do anything. I do believe that this tariff is the main thing driving the market right now. And I said the other day, and I still believe it today, if they come out of this with everything else, with nothing being done at all, and Trump says, you know what, fine, I give up, we're not going to do tariffs this time, we'll revisit it, the market will go up. And I think that's probably our best outcome is that he gets something that protects intellectual property, which I think should be done. I think that's absolutely paramount. I don't think my view's slanted, Ted. Can you explain? I'm literally not trying to have a slanted view. He actually did something here. Let me show you not slanted view of Trump. He did something good last night, which I was like, hell yeah, good job. He here we go. Where's it at? Committed to protecting patients and their families from surprise medical bills. That's fucking awesome. That is really good. So if I heard, was it radio last night? Where did I hear this last night? I was listening to something. Oh, it must have been in the car. It must have been in the car. No, I didn't have my radio on in the car. Anyway, he's doing something where he wants hospitals and insurance companies to figure out a way to make sure that when you get care in a hospital and you don't choose all these contractors, because I mean, a lot of us have gotten these bills. I got one a year ago, basically. Actually, 2 years ago. No, I'm not doing politics in here, but anyway, I think this is good. So 2 years ago, I went to the emergency room with my son at 11 o'clock at night. He had an earache, a very bad earache. So I did go to the ER because he was in so much pain. I really didn't want to mess with it. So went to the ER. Knew I was probably going to have a $400 bill. I knew that going in. So by the time it was all said and done, I had a $400 bill, but I got an additional $400 bill. So they charged me $800 for the room, and that's where the $400 came from. They charged me $800 for the doctor that came in the room, and also billed me $400 for the doctor. The insurance company paid $400 for that. I wasn't expecting to pay $800 for a stupid earache for my kid, or all they did was put drops in his ears and put a fucking piece of cotton in there. So I really like what he's doing there. Okay? What I'm referring to, Ted, that the market doesn't like tariffs is that every time when he starts tweeting about tariffs, the market drops. That's what I'm referring to. That's what happened over here. It was the Chinese tariffs when he really got aggressive about it. That's when the market started to drop. We did the other day, there was an IBD article that we looked at. And IBD is pro-Trump. And I mentioned this yesterday. IBD is pro-Trump, and they did an article stating Trump is making a mistake with tariffs. And I'm like, wow, IBD usually doesn't do that. They're a decently right-wing publication, even though they're very neutral in regarding to stocks and stuff like that. They're pretty pro-tax cuts and pro-Trump policies and a lot of that stuff. But Trumps are decidedly bad for stocks. I'm simply saying stocks. I'm just simply saying stocks. I'm trying not to be political here, but you have to talk about Donald Trump, and 4,800 sounds cheap. Yeah, well, thank goodness I don't live in San Francisco. But no, you have to talk. You have to talk reality. The reality is our president is talking tariffs, and tariffs are bad for stocks. So we're trading stocks. We have to pay attention to that. And now I would argue, don't let anyone's pro-Trump stance let you think that if he does tariff, stocks are going to rally. Okay? I will argue the opposite of that, because it just hasn't proven to be the fact. Every time he tweets about tariffs, stocks don't rally. You know what I mean? It doesn't work that way. Think about how tariffs work. Tariffs work by increasing costs of goods overseas. What will that do? That will decrease imports, which means people will not be able to buy. You're basically choking Target and Walmart. If Walmart slows down by 3% next quarter due to tariffs, how is that good? It's not good for stocks. It's not good for stocks. There's really no way that the U.S. wins. This is how I think. Now, maybe I'm getting a little political here. This is based on his tweets here. Like, here you go. Here's his tweets again. Don't have to believe me. And so here you go. Build your products in the U.S. There are no tariffs. I agree with that. Perfectly fine statement. Perfectly fine statement. But down here he says, tariffs will bring in far more wealth to our country than even a phenomenal deal of the traditional kind. Don't even know what that means. Don't even know what that means, because it won't bring in far more wealth. It won't bring in anything. It can't bring in anything. By definition, tariff means don't bring your crap here. I don't want it for whatever reason, right? So he also talks down here about buying stuff from farmers. Where is it at? It's down here somewhere. I was reading it this morning. Somewhere down here. He says that he's buying stuff from farmers. Well, you're spending taxpayer money to buy stuff from farmers, and I don't know. I don't know what he's doing with it. I don't know what's happening to those farmed goods. I'm not sure. Is this Trump's Twitter? Oh, okay, it is. I want to make sure it wasn't on something else. Really low inflation. Yeah, to be honest with you, it's nothing to do with Donald Trump. I don't think our government does inflation correctly. Your all-time favorite president got tired of waiting for who calls themselves the all-time favorite president. Someone can call you the all-time favorite president, but you saying you're the all-time famous president just makes you sound like a dick. Oh yeah, here we go. Here we go. Your all-time favorite president got tired for China to help out and started buying from our farmers. So Trump's buying from our farmers? I don't even know what that means. So he just owns a shitload of lettuce now? I don't understand that. And then where's all this stuff going? Where's it going? Where's all this lettuce going? I don't think Trump owns a truck big enough to haul all that lettuce. Anyway, tariffs, bad. Apparently we're still doing tariffs. So, another reason for me to go cash. All right, Roku paused a little bit here. AMRN pulled in. Wow, look at that, pretty aggressively. I'm just taking my time here. I'm just taking my time with this whole investing thing right now. INS still super bullish. Look at that. That's beautiful. 63%. That's tremendous. This is getting close to high tide flag territory for INS. This has another big pump up. You need at least 80% to qualify for a high tide flag, and it's close. It's really close. 72%. This thing gets one more pump out of this. Definitely could qualify for high tide flag status. Unfortunately, it looks like the market may go into a correction if this action continues. You got an opinion on the Slack IPO? Nope. I do not. Is it? It's not actually IPO'd, is it? No, it's not. No, so the way I deal with IPOs and Beyond Meat, I'll address your question in a second, Ted. Beyond Meat is a recent IPO, BYND. Yeah, this is a recent IPO. I'm very agnostic when it comes to investing. Pretty much what I look for is certain base structures, Michael. I don't really care about the company at all. I care if it's growing, if it's in a good market. I care if it makes money, basically EPS rankings, and I care about the chart pattern, meaning it's being accumulated by institutional investors. That's what I care about. I could give a crap if it's Slack, Lyft, Uber, the people that make this cup I'm drinking out of. Here we go. That's a good cup. Yeah, I don't care about any of that. All I care is the company growing, are the earnings per share good, and do institutional investors want it? That's pretty much all I care about. And if I can find a trading advantage in there somewhere that I can leverage, that'd be great too. With IPOs, what you do is you look for an IPO base to form. Let me show you an IPO base with Twitter. It never actually didn't even really form one. Here's Twitter's IPO. What you do with an IPO base is you wait for some kind of a depression to form. So here's Twitter's IPO base, and there's your buy point from Twitter's IPO base right there. That's what I look for. That's what I look for right there. I look for an IPO base to form and then break out. So I wouldn't buy Twitter anywhere in here. I would buy it right there. I maybe would buy it over here if it was, forming a slightly different pattern or something like that. If it formed something in here I could buy, maybe I'd buy early right there if things were looking good. I'm not going to go too deep into it here, but you basically catch my drift. That was 2013. I'm going to go back to 2017. So I would buy an IPO base on Slack regardless of whether I like it. There's lots of companies I like that I don't buy. I like a lot of ones. What's BE? Bloom Energy. Here's my baby right here. Love Bloom Energy. I love this stuff. Bloom Energy is fantastic. Probably one of my more favorite. It's actually kind of a green energy company. Basically, there's a NASA engineer. The dude created these little 4x4 metal squares that act like battery cells almost. But what they do is they generate electricity from natural gas, and they have transformer-sized boxes on the side of like Google and Apple, and have now for a decade. And they recently went public last year. We were tracking it. It was doing okay. This was arguably your IPO base, but it never really came to fruition in terms of. But so I don't care about it investing wise till it's investable. Michael short cups. How invested are you in the market at the moment? Currently 50% invested in index fund, 50% cash. Yeah, I'm pretty much a vast majority cash at the moment right now. I usually hold 50% of my account in leveraged index funds for the NASDAQ, and the rest of it I have an option strategy that I employ right now. That may change in the future, but right now that's been a pretty good strategy for me. Where would you buy Amazon on the pullback? Well, I would kind of wait for the market to flood itself out or flush itself out. Of course, I want to see 250 bars to the right. Oh, 347 today. Yeah, there we go. I don't know, Eli. Maybe, so the 50 days right here. A test of the 50 day is always good. If you can get it on a bounce off of the 50 day, I think that would probably be good for right now. It looks like about 18.14. Ted had a question. Canada's fighting the same problems with China. China does not do their agreements like they say they're going to. Yeah, we got to fight for that. I definitely understand that. Yeah, 1814 is the 50-day moving average. So yeah, somewhere if it gets down to 1800 and the market isn't garbage, the market's been on kind of a slow drip down today. We'll go look at that. We'll go look at that here in a minute. No, I definitely think China needs to be addressed. I think, yeah, I really don't like stealing of intellectual property. To be quite honest with you, I think that's a problem. It's not an easy problem to fix. Tariffs won't solve it, I don't think. Now, if I don't mind what he's doing, kind of on principle in terms of intellectual property. If they have import tariffs on U.S. goods, and we don't have import tariffs on Chinese goods, I think that should be addressed. But anyway. Regardless, yeah, I don't think trade deficits are bad, like the actual trade deficit, because that basically means that, hey, the U.S. wants to go over there and have goods built over there. That's something that we're actively doing. China isn't forcing us to do that. We're doing it of our own free will. It's kind of like saying, oh, you're spending too much time at work. You should be at home with your wife. It's like, no, I got to go make money, lady. You know what I'm saying? Spend an hour with her in the morning, 3 hours in the evening, and 9 hours, 10 hours at work. That's the average American's life, right? So, it's like telling your wife, hey, or your wife telling you should stay home all the time. It's like, no, I'll be broke and won't have any money. I have to go spend more time. And that's kind of how I view it a little bit. What else we got here? Oh yeah, I was gonna go look at the NASDAQ intraday. So volume definitely less than yesterday, getting down towards the low of yesterday. Overnight we went higher a little bit, and then I did notice at the close yesterday. At the close yesterday, I almost bought back part of my long position. The reason I didn't is there wasn't a flurry of buying at the end of the futures day. So the NQ is the futures market for the NASDAQ. Usually if things are really bullish, after the market closes, which is on this dotted line here, the futures market close, I thought it was 15 minutes after maybe it's 30 minutes after. I thought it was 15 minutes after the market closed. Maybe it's 30 minutes after the market closes. Anyway, the futures have a tendency, the second the market closed, to rally if things are really, really bullish. And they didn't. They were floundering about. I saw, I was looking at the market action, and I just wasn't feeling it. I just wasn't feeling it, and I didn't buy it. I'm like, oh crap, I hope that wasn't a mistake, because, we all make mistakes. Today proving not to be a mistake. But we'll see what happens going forward here. We really haven't had a good bounce in in 4 days since Trump started tweeting about the tariffs again, which was pretty much right there. We were setting up in a nice consolidation. You see things right here, hunky-dory, nice sideways action. We're kind of waiting for things to play themselves out, and then tariff talk starts again, and then they think the China deal is going south, and then we end up with this. I don't think one bout of buying necessarily gets us out of that. Now, if we have behavior down here at the 50-day that is bullish, like yesterday was pretty bullish behavior. If we do that again today, that could be a good sign. I probably will be re-entering part of my position, not the full thing, but part of it, if the market does show some support here. Basically, 7,500 got down to 74.80 something. It looks like. So if we do see some bullish action down here, I probably will buy some. I won't go all in though, because there's still this whole China deal is going to be super important, very, very important for the shorter term stock market. And look, if we're going to go down lower, I'd rather buy a little bit lower than arbitrarily get in or stay in. I'd like to maintain those profits that we got out of the lows of the bear market, out of those buys that we did. So anyway, it just popped into my head for some reason. Tesla. What are you doing, Tesla? 238, huh? My wife's gonna kill me when she looks at her account. I'm like, hey, you're a long-term investor. This is what happens if you're a long-term investor. So we failed. We got up above 250, failed at 260. Looks like there's a pivot point there, especially with that area there right now. So 260 right now appears to be our line in the sand for Tesla. What kind of weird stuff did Elon tweet last night? Uber CEO says I disagree on Musk's robo-taxing timing expectations. Be quite a few years beyond 2020. Of course it will be. It's Elon Musk. Yeah, Tesla's getting into too much stuff. I really don't like this whole insurance bullshit. I don't like any of these games. These all seem like games. Tesla's just playing games. I don't like it. All right, get off garbage, Tesla. INS. Oh, INS may be trying to break out right here. At least out of that little 5-minute chart. Everyone wants to bully Tesla because if he is right, all of their fuck. Yeah, basically. Look, man, I'm a big Elon Musk fan. I love what the guy's doing, man. He's basically, he kind of is like Iron Man. He's kind of a geeks billionaire, I like all the stuff that he's doing. But yeah, I think he missed a step somewhere and is trying to figure out where, and maybe he knows what he missed and maybe he's trying to fix it. But he missed something somewhere. We talked about that the other day. I think he missed it by stopping at the Model 3, just pausing for a while for like 5 or 6 months. And I don't think he's managing his cash flow very well. Is essentially what it is. All right, so it looks like we're pausing down here at the lows, so that's good. Oh, looks like a little bit of a bounce. See if that continues. Yeah, well, that's the thing with Eli. Is it too late to go ahead and sell and be in cash? Well, I would say if that 50-day moving average, I would wait. I mean, we're already down here, Ted. I would just wait for the moment. I don't know all that you're in, so it's hard to say because it's gonna, like, if you have Roku, I think you're fine. If you have, Twilio, I think you're fine. If you've got some of the ones on my actionable list, I think you're fine. But I haven't looked at. I think you're still in Winnebago. Winnebago rolled over a little bit. Doesn't look bad though. You can see the volume isn't super heavy on this. I wouldn't be super concerned with this position on Winnebago. In terms of the NASDAQ, I don't know if you have any of the TQQQ that we talk about. Um, yeah, so there's Nasdaq on the daily breaking, or at least so far finding support on this trend line. But if this trend line breaks, probably we'll find a deeper consolidation right at the 50, maybe down to the 200 to 71.63. So if this low doesn't hold, if this doesn't look like it's going to bounce, then and it starts undercutting or this 7,500 area pretty deep. This one 74.81 is the low. Yeah, I would start liquidating. I would start selling. Because here's the thing. Let's look up the schedule for these trade talks. It really comes down to these trade talks, guys. For China trade talks. It really just comes down to the trade talks. U.S. hikes tariffs on Chinese imports. They actually did it. U.S. and Chinese negotiators will resume their high-stakes trade negotiations on Friday, hours after a scheduled increase. Oh, so it went up today. The Trump administration raised tariffs on $200 billion in imported products at 12:01, significantly raising this. Oh, that deadline was. Oh shit. So we are already in raised tariff territory. I missed that minor detail. Yeah, I'm looking for the schedule, people. Is it a week? Is it like a week? I don't know. Yeah, see, here's another thing. And Trump said the U.S. can take in 120 billion a year in tariffs paid for mostly by China, but economists say much of it will be paid by U.S. businesses and consumers. So, I, do you believe Trump or do you believe a lot of economists? Tariffs will be applied only to goods shipped after Friday. That will provide some relief to U.S. businesses that have orders in transit. Yeah, because a lot of the orders are U.S. business to U.S. business. They're not necessarily China business to U.S. business. It looks like China is removing a lot of the social media stuff saying Trump is threatening more tariffs. They're removing that from their internet. Yeah, that's funny. And so far, I don't like the look of that candle. Right back at the lows already. And we go breaking the lows. There we go. Oh, there's some buying. Okay, a little bit of buying. What are we going to do, little 5-minute chart? What are you going to do, little 5-minute chart? How cute. All right. So it doesn't give a timeline. Doesn't say how long the trade talks are going to last. If it's a week, I think it's a week, for some reason. China to host U.S. trade talks in Beijing in early January. Oh, that's back in December. Why did that show up on the first page of Google? That's weird. That's a long time ago. All right, Eli. See you later, buddy. Yeah, so we're undercutting a little bit here, Ted. Again, not exactly sure what you have, but looks like the markets are not going to stand for not having a deal or something. I will say this: markets don't like uncertainty, and throwing a great portion of our economy into uncertainty, the markets are playing defense right now. So you can see on the daily the sea of red coming in here, many distribution days in one day. We're going to probably go into correction if this, even if we close here, well, we'd have to have elevated volume probably for a distribution day, which would put the market in correction. So it probably would have to get much worse for this to be the day that we go into a correction, according to IBD. We're at 5 distribution days on the Nasdaq and the S&P, and if they're going to call it at 6 distribution days, that's kind of crazy. Yeah, five on Nasdaq and the S&P. And yeah, we just kind of broke down right there a little bit. Yeah, no, I know China's not a free. If you're referring to what I was talking about earlier, Ted, I was saying the U.S. is a free market. The U.S. is a free market, so we let our companies do what they want. You want to go build in China? We let them go build in China. We're not going to stop them. It's the United States of America. But that's the free market. You find cheap labor somewhere, guess what? You go build stuff there. It used to be we would build stuff in the heartland of America because labor was a little less expensive. I don't know if that's even correct, but anyway, we used to build wherever the labor was least expensive in the U.S. And once the internet came along, we were able to communicate really effectively across borders and across the globe, and shipping became more attainable. Well, guess where labor was cheaper? In China, in India, other countries, not even just China, but many other countries. That's where we build stuff. We build stuff in other countries because that's what our free market system does. That's what the free market does. So if you want to, if you don't want a free market, then you start placing this rule and that rule and the other rule. But yes, it does suck when when who you're doing business with doesn't abide by those same principles. Then you just have to decide how we're going to deal with that. That's all. All right, not a fan of this action here. Hope we don't undercut yesterday. We're getting down pretty low pretty quick. 74.81 is our low. Let's see what happens down here. We could find some more support, but I think probably the major thing would be is the trade talks. Like I said, is the trade talks. If we don't have trade deals of some fashion, this market's just taking risk off the table. And see, it's just it's a time thing. It's literally a time thing. The market takes a very long time to get into positions and to get out of positions. These institutions that have just billions and hundreds of billions of dollars of assets under management, it takes them a tremendous amount of time to get. So you're going to have this continual selling pressure because it looks like the institutions want to sell, right? So the institutions will continue selling until the fundamental aspect of their reason for selling is resolved. And right now it looks like that's the trade talks with China and these tariffs. So until that's resolved, you'll see continual selling pressure. Now there will be some sectors like INS doing pretty good, up 4% here now. And we saw Roku yesterday and today up 2%. So there's some sectors that the market isn't interested in selling, but overall in mass, it looks like they're in kind of liquidation mode. Well, what are they liquidating? Looks like Ubiquiti. Wow, that's a big sell-off right there in Ubiquiti. Ubiquiti's had a huge rally. Go from 175 to a year ago, you were at 75. So they're selling some stocks that are up a bunch. Manitowoc, which is international play. Carvana, taking some profits there. Wynn Hotels, that's probably in its own weird cycle. So obviously I don't have every stock up here, but you can see that they're definitely liquidating. Oh, TripAdvisor. Man, undercut that longer term trend line. That sucks. That could have been a good trade. SoFun, TNA. TNA is triple the Russell 2000 index. You can see that's heading lower. BLFS. I have too many growth stocks up here. But anyway, so Apple's down 3%. Wow. Apple could be a This could be a huge problem for Apple if the whole China thing happens, because I believe even the iPhone is at risk for having tariffs thrown on it. When your iPhone goes up by 20%, you know, you're probably going to switch to Android or something. Or actually, I don't know if you can switch to anything. They'll probably just stop buying smartphones. Well, that's my point, Ted. Regardless, it doesn't matter screwing up stock accounts. So, um, you have an option to sell. Did we undercut? On there, it looks like we undercut. Yep, looks like we undercut. We undercut yesterday. So that's no bueno. Look at that, straight through. If we take a measured move off of this, as we used to do in the power hour, on the 5-minute, we can get a little bit lower here, all the way down to the 74.40 before we see a bounce of some kind. That would be a measured move out of that particular leg. So we're running the real risk here of deeper declines. If you want to short it, that's up to you. But again, we discussed shorting a week or so ago. I think as we were up here, we discussed shorting and kind of the huge rallies that that corrections have. You can have rip-roaring rallies that take your face off if you're shorting, and can really whipsaw your account around. So I tend to stay in cash during bear markets in the stock market, and corrections as well. And it looks like we're still undercutting lows there. So yeah, market doesn't like it. I don't like it. It's pretty much what it boils down to. Look, if the market didn't care about tariffs, I would give two shits about tariffs, to be quite honest with you. We wouldn't be talking about tariffs. How much stuff do we not talk about that happens? So much. We're only talking about it because it's the news of the day. And I think for a good reason. It's a large segment of our economy that it's going to affect, and apparently institutions think that too, because they're selling. All right, 75.60. See if we get down to the 75.40 where this measured move takes us. Roku giving up a little bit. INS. Looks like it reversed its fortune right there. So market's going to be taking it on the chin here. This is not looking very good here. This looks like an outside day on the NASDAQ, doesn't it? This already is an outside day. An outside day is where the high goes over yesterday's high and the low goes under yesterday's low. And if it closes lower, that is a pretty negative sign. If it closes higher, that's a pretty positive sign. So today, so far, I know we're far from the close, but we are definitely outside day to the downside. So, all right, guys, I got to go. My kids are going to take off to school real quick. And looks like the market is kind of tanking. 74.48. I mentioned 74.40 is kind of where that measured move took us. But the way this is behaving, it looks like it's going to go down further. I've seen market declines like this before. You get these big bars coming in like this, and they usually don't quit very easily. So we'll see if Trump will send a tweet out. See those bars are getting a little bit bigger. We'll see what happens. 74.44, that's pretty much that measured move, so we could get a pause right here. All right, guys, well, I'm going to get out of here. Stay safe out there. Protect those accounts in some fashion. Buy a hedge. Do something. Buy a short if you're long. Buy a long if you're short. Well, don't do that. But anyway, guys, I'm out of here. Have a good day. I'll see you tomorrow. Today's Friday. I won't see you tomorrow. I will see you Monday. Bye-bye.